Hey guys, in this video, I'm going to show you two specific examples of how I knew the bear market was over. And these are key details that I look for. They're not going to be something that you find in a technical indicator, a technical chart pattern, or quantitative mechanical reasons. This is simply screen time and just having a lot of experience and making observations in my career, and I'm going to share them with you. So let's just go back here and rewind a little bit. We're going to take a look at the S&P. And if we look here back in April, if you're following the channel, you'll remember that we talked about there's going to be a low last week of April, absolute latest first week of May. We had cycles, things of that nature going on. That's not really important. What's important is that we were not sure at the time if it was going to be a situation where we were going to see this, big reversal, and then would we see some type of a stop run, fake low, a new nominal low to, get dip buyers out essentially, and bait shorts for liquidity. So we weren't really sure. We knew that there was a macro low in place, meaning that, yeah, we put in a low at 4,800, 5K. Most we would see after that was maybe like a little nominal low to 4,700 if by chance we rolled over here with a divergent kind of sweep of that prior low there. We had the trend lines, we had plenty of other things. I don't want to get into that right now, but really what we were looking for is how did I know that this low wasn't going to get challenged again? And there's two reasons. There's probably plenty more that I could think of, but I want to share these two because I don't think you're going to find them anywhere else. And I don't think you're going to find anybody else who makes this connection. They do, they might sound a little strange, but just decide for yourself. So let's look at Amazon here. Amazon reported earnings on May 1st. Market gapped up that day. We'll talk about why that was in a little bit. But market gapped up, Amazon gapped up with it. They reported earnings in the afternoon, and you can see the price action the next day. It closed flat. But let's look at how it responded after the earnings report came out. So you can see here, if we look at the intraday price action, it closed, it was kind of a sideways day for the most part. Little dip right before the close. Earnings report comes out right at 4 o'clock. Immediate dump. Impulsive dump to 180. Closed at 191.50, or it was at 190, almost 192. A few minutes before the close, dipped a little bit to 189.84. Dropped 10 points, so 5% for a $1 trillion stock. Pretty big move. Then it had a pretty good rebound, right? Never took out this low, right? So the impulse was never touched. But what really sticks out beyond that is the next morning around 5, 6 a.m., this just started trending and bidding pre-market, right? There's no gamma here. It's pre-market. There's no options. Somebody's buying. Obviously, their earnings were not good, but what told me that this was probably priced in and the market was sufficiently hedged was this price action. There was no news that came out pre-market. There was no additional statement from the CEO clearing up this thing on the conference call. There's nothing. So this was just organic short covering. So that tells me that likely anybody who was short here covered into the lows, and anybody who tried to short any of these rebounds was getting squeezed up. Now, it did dip the next day. And we can see it closed red, right? It closed down a whopping 22 cents. But intraday, that dip was bought, right? You can see the intraday price action right here, right? So it made a low at 9, almost 10 a.m. And then it just kind of floated up the rest of the day to close essentially flat. If their earnings report, again, so this is just simple logic. If the earnings report was that bad and the market was not well hedged for it, why did it close flat, A? And B, why didn't it take out the impulse low? Let's go to the next 2 days. Gap down, doji, gap down, gravestone doji. What's the low of the day here? 183.85. What's the impulse low from their earnings reaction, which happened immediately? 179.88. So we didn't even challenge that. During market hours, despite pulling back off the 50 MA the last couple of days. It might sound really simple. It might sound like it's such a meaningless detail, but it matters. Amazon is a company that is, like, what was bringing the market down? Tariffs, right? Like, this company is, them and Walmart are like the outsource, poster child for outsourcing, right? They rely on that, on those cheap goods on global trade. Shouldn't it have sold off? If we were going to make a new low, if the market wasn't hedged enough, if there wasn't enough shorts in this, wouldn't it have made a new low? Wouldn't it have at least taken out the reaction low from earnings? Didn't do that. That was a signal to me that this market had likely bottomed. And I say this as somebody who had a full position size in AMZU at the time. That was underwater. Not by a ton, but it was. And that ended up making money, and that reaction really gave it away. What helped that reaction was, I talked about this at the beginning of the video, it gapped up that day. Why did it gap up? Because the day prior, Microsoft reported. So the whole market really got a bid, specifically tech and NASDAQ. And if you're in the trading room, you know exactly, you'll remember exactly what I said immediately that day. So basically, like, it's over. Like, why did I say that, though? You see where Microsoft, so it's the second or third largest stock in the NASDAQ 100. Yeah, lately NVIDIA has now overtaken, but still, it's Microsoft. $3 trillion company. We sold off here, right? We had a big dump February 20th, right, with the market, and it had already been making lower highs before that. Trending down, reversal, move up, 395 to 430. So you're looking at a 10% move in a $3 trillion stock. Microsoft's a slow mover. It doesn't move 10%. But more importantly, you gapped above the 200 and the 100 and this cluster here with that major pivot. I don't even care that it came off the highs of the day. That is meaningless. The fact that you gapped up that much on that stock on earnings, that was it. And I even said, like, normally I don't like condone chasing or anything, but I was like, you can, like, I was like, guys, you could buy this. If it gives you any dip, like, you can buy it. And it didn't even give that. Look at what it's done since. Oh, double top, triple top, below and right through it. Now it's at 500. When a stock like this gaps that much, it's so powerful. It's so powerful. And you can see it just ran through the gap, ran through this pivot, ran through that pivot, ran through that pivot. This was telling you the market was strong. This does not happen in a bear phase. So I know it's these are, like, kind of, I don't want to say esoteric, but unconventional things to look for. You almost have to, like, use logic. But those are, like, certain, like, and again, going back to Amazon even. Why didn't it take out the low, right? If it was so bearish, why didn't it take out the reaction low? It didn't. That means that shorts couldn't overpower, like, simple technical analysis, right? A low pivot is made. It doesn't, it makes higher lows after that. Well, that's bullish, right? It makes higher lows after the low pivot is made with bearish news. Amazon's a Mag 7 stock. It's not going to, highly sensitive to tariffs. It's not going to do that for no reason. Microsoft is not going to gap up 10%. How many times did Microsoft gap up 10% ever? Since it's been a $1 trillion company. Look at this monthly. And by the way, I was long Microsoft in Jan-Feb because of how tight and uniform this consolidation pattern is. It was a very hated stock at the time. Same reason why I got long Apple last year. Oh, the stock's going nowhere, hasn't done anything for it. Yeah, because it's consolidating on the monthly. Remember, nobody wanted Apple last year. And, we bought and made a killing on it with swing trades. So those are things I look for. Now, I did end up taking, so right before Feb OpEx, I did sell all my longs. And we did okay on that. I actually took like a loss on one or two of them. This was one of them. It was only like a 2% loss. I think we bought like right here and we sold like right at that time. And I basically dumped everything as soon as we saw this because we were looking for a cycle date. At that time, we saw confirmation we got out, which was nice. We missed a big dump. But I also, didn't get in to this beautiful, look at this back test here on the monthly. Hindsight looks really good. Granted, we had index long, so it worked out. But yeah, my point is, how often are you going to see a $3 trillion stock do that? I can't describe how powerful it is to gap that much over the 100 and 200 from a position of weakness, no less. That it's just, Microsoft's not going to do that if we're going lower. You're not going to see that in a bear market. So anyway, there's two details to look for. Again, I'm not saying you're going to, look at the next time we have a bear or a bull or whatever and say, oh, Microsoft did this. I'm just saying there's things you can look for that you can just apply logic to. Like, why didn't we make a new low here with Amazon, right? It's highly sensitive to tariffs. Why couldn't it take out the impulse low? It means there's probably sufficient shorts, right? So it didn't go down on bad news. Simple logic like that does work from time to time. Again, it's not the be all end all. And I would never take a trade just based off of, one of these things. Right, we had reasons to be, to think there was a bottom end, the trend line, cycle dates, all that stuff. But these are confirming factors to me that showed us that we were not going to make a new low. In fact, the low was in, and we were going to be looking for consolidation to buy for a move higher. And then a few weeks later, S&P did the same thing that Microsoft did. Mega gap above the 100 and 200. Forget overbought. That's an impulse. Don't fight that. And we were adamant about that. But anyway, let me know if you guys enjoyed the video. If it helps you out, give me a thumbs up. Subscribe to the channel. You can also come find me on carnivoretrades.com for swing trading alerts analysis and live day trading. You guys take care, and I'll see you guys all in the next video.